Hello?
Hello?
All right. Can you hear me now? Okay. Well, what I'm going to do, I don't know why this computer is not working, but I set up my phone just in case. So just to make sure you can hear me, let's keep on going. Sorry for the delay. Okay. Again, I repeat that, I don't know. Let's see. Stop. Video. Okay, good. Yeah, I don't need to see me. You don't need to see me on that galaxy. That's good enough. All right. Now, just a little background about who I am. Retired college professor. I'm currently a commercial real estate appraiser, and I'm also a residential real estate investor. I'm from New Jersey, so I'm used to this cold weather, except that was, golly, almost 50 years ago. I guess that's 50-year high school reunion coming up. Man, graduated from Morehouse College, then Georgia State, received an MAI designation in 92. So then just a little about my work experience. Now, let's talk about the course, summary course that we're going to be, the 4 classes. Today, we're going to talk about understanding the stock market. Next Wednesday and Thursday, we're going to talk about your portfolio. Class number 3, in which Councilman Reels, or Treasurer Reels, received a lot of requests about learning about Forex. And I wonder if there's supposed to be 2. I think I spelled that 4X correctly. I know foreign exchange market. That'll be class number 3. Now, I'm not an expert in that, but I have somebody who will be coming in and doing a guest lecture via Zoom on that week. I'm looking forward to learning that also, because he's telling me that he can guarantee me 3 times my money a year based on his investment strategy. So I'm interested in seeing how this works, and he's got data to prove it. So if so, I might get him to invest some money for me. And then class number 4 will be a summary of everything in this course, plus kind of like a summary of everything, tie everything together. All right. First of all, we're going to define the stock market, right? What is the stock market? You know, this is a stock market course, but we need to understand what we're talking about. First of all, market. Market is a place where knowledgeable buyers and sellers meet to trade items. You know, like a farmer's market where they trade vegetables. You've got the foreign exchange market where they exchange currencies. You got a Bitcoin market where they exchange cryptocurrencies. And you've got a market, for example, of precious metals or oil. In other words, buyers and sellers come together and trade items. The key is they've got to be knowledgeable buyers and sellers. That's going to be a key. We're going to talk about this because in order to be considered a market, the buyers and sellers have to be reasonably knowledgeable. Right now, of course, knowledgeable varies, but it is important to go ahead and be knowledgeable. Second, stock. Right? Stock is the owner's position in a company, right? In other words, the ownership of a company. People own companies, they may own 100% of it, they may own 10%. You can actually take your ownership for a company, you break it up into parts, and each part has a certificate attached to it, which tells you you own a percentage of the company. Well, all these companies then can take their certificates and put it into a marketplace where knowledgeable buyers and sellers can buy and sell those ownership positions, those sheets of paper. So while we're at this, let's talk about a bond market. Well, we know what a market is, right? Knowledgeable buyers and sellers. But in this case, it's bonds. We'll talk a little bit about what bonds are and that kind of stuff. But basically, there's a market out there for you can buy and sell, trade bonds. So that's what we're talking about. We say this stock market. It's a market where people come together, knowledgeable people, and they buy and sell stock, which is an ownership position in a company. As the economy moved from an agricultural base to an industrial base, there became a need to raise funds so that these new industries and businesses could grow. As we talked about earlier in that wealth creation class, there was less need for land as people moved to the city and more need to raise capital so we could start a variety of different businesses. From the late 1800s until 1929, there was little or no government regulation. The New York stock market is the oldest and best known market of stocks, probably in the world. I know definitely the United States, right? Yeah, in the world. Why? Because 24 stockbrokers started this in 1792, right? On a corner in New York, which is now, that street is called Wall Street. In 1810, they created the name New York Stock Exchange. So it has a long history. What it did is it allowed these brokers to come together, buy and sell, trade, right? Trade different ownership positions and allowed companies basically to raise money, right? To create these shares and then sell them in this open market in return for money. And then people could buy and sell. So it was kind of like a liquidity market pool, as we talk about it now. But it helped raise money to industrialize the United States in the 1880s. So you imagine it started in 1792 as kind of the Industrial Revolution, early stages, and kind of developed in the 1800s to basically help industrialize the United States. People raising money. It helped finance the railroads in the 1830s. It helped finance the Civil War, especially for the North. The key is only members can actually trade stock back in those days. So there weren't that many members. And if you wanted to, of course, you made quite a bit of money because there were a lot of companies that wanted to issue stock and raise money. And there were people who were buying and selling so that they could participate in these growing companies. And only these few, basically white men, could buy and trade stock on this stock market. And they charge a fee. So you can imagine they were getting wealthy. The Panic of 1837, in which there was kind of a partial market collapse due to the tremendous growth in the stock market because of the railroads. You imagine now they're financing railroads across the country. They're able to move people and product and all kinds of stuff. What used to take months to get from the east to the west coast now takes days. So it revolutionized the country and allowed for a lot of areas of the country to open up for trade and economic activities. So there was, as usual, a lot of scammers in there and a market that got overheated. So it caused a collapse, well, a panic in 37, they called it. What happened is to help solve that is the New York Stock Exchange required all companies that wanted to sell shares to publish public information. Remember, in a market, you've got to have buyers and sellers that have knowledge, Well, you can't have knowledge if you can't have information about the company, about the owners, what's going on, how well the company is doing. So you can imagine back before information was required, people were just probably making up all kinds of stuff, coming up with all kinds of scams, raising a lot of money, and then disappear. Well, for the uh, members or kind of owners of the New York Stock Exchange, that's a problem because if people lose trust in the market and figure that there's inside trading, people are scamming, then they won't use it anymore. They'll find something else, and that market will collapse. So it's to the interest of the owners of the market to make sure it's honest. And that's the same as anything. Let's say you had a market and you're selling fruit. You want to make sure that that fruit is healthy. It doesn't make people sick. It's got all these things. So they would probably make sure that the sellers of the fruit do whatever they can to keep that food healthy and stored well. Because if not, then people say, "Oh man, you go to that market, man, that produce is terrible." They'll stop coming. So the next one was 1929, just a little less than 100 years later. The crash of 1929, that we all know, called the Great Depression, occurred, in part because of the stock market being oversold again. Scammers still learned how to beat the system. And so FDR created, as part of his Great Society, to actually include government oversight of these stock markets. So that's where you get the SEC and you get other agencies now that kind of oversee these markets. And again, the New York Stock Exchange agreed to that because it was probably the only way they could save the market. People lost, like you see those old videos, pictures and stuff of people living on the street and in soup lines and all that kind of stuff. Probably lost a lot of money and very upset about what happened with the market, lost trust in it. So if you don't fix it, it's going to be a problem. Trust is very important in markets. So there's a limited number of members, and until the late 1960s, they were only white males. The only way you could become a member is you had to buy another member out. So they kind of had a good old boy network. They're not going to sell except to certain people. They probably had enough interest in people who wanted to be members. So it wasn't until the mid 60s that they kind of integrated membership in terms of women and people of color. Which is interesting because, heck, I remember those. Now I was a little kid, but I remember the stock market back then. I used to follow it as a young kid. Okay. Now there are many markets around the world. There are many stock markets around the world. They operate 24/7, 365. They've developed, once the government came in and oversaw it in the 30s, and they continue to upgrade and do things. As we constantly have kind of cycles up and down, when we have these periods of over, kind of like, how should I refer to this, as sort of like overpriced. The market then collapses as it corrects itself, and we normally go through a recession. So government is constantly monitoring, and there's still always scammers. The biggest one, if you remember, was a few years ago, probably a decade or so ago now, because the guy just recently died, was the Bernie Madoff, the guy who had a Ponzi scheme using the stock market to get people's money to invest. And he was supposed to be this great investor of the stock market. But in reality, he was just collecting money from people and paying other people, and it was all fake. And it wasn't until the collapse of '08. Normally when these collapses occur, all the scammers and everybody else get caught. And so when the market collapsed in '08, it was a real estate market, but the stock market also corrected. Found out that, of course, he couldn't run the Ponzi scheme and collapsed on it. He couldn't get enough investors. So that was '08. I know he just recently died. So, ruined himself. His family had a bunch of people involved in it. Billions of Yeah, billions of dollars. So even though we have all this government regulation, the internet was up and running, people were still scamming with certain markets. Now, we talked about some markets. Let's talk about some other markets before we get into detail. We talk about the bond market, right? We have bonds. The stock market, stocks represent an ownership position, equity in the company. So you're selling equity. Bond markets represent a liability, like debt, like a credit card or a loan, mortgage or something. So normally a company can create certificates known as bonds. Federal government does it. And they issue them, meaning they sell them into this market. People will buy the bonds because they want that interest, that return that they get for the bonds. And then after a certain period of time, they get their money back. And because it's in a market, it's kind of liquid. So they can always sell their bonds early if they want to. Sometimes bonds have the ability to say, I don't want my money back. I'd rather have ownership. So you have bonds that are convertible, where you can convert them from a liability to asset, right? So in other words, just being a debtor, you can actually become an owner. And so inside of that bond will be some formula that allows you to, instead of getting your money back, we'll give you stock back. Why would somebody do that? Well, it might be a company that maybe has some problems, but if it turns around and the ownership becomes valuable again, they want a piece of that. It could be that the company is new and they just want to borrow some money. And again, if it turns around, then the owners say, well, yeah, I don't mind getting 8, 7, 6, 5, nowadays 1%. But this thing turns around, I want the option to buy some shares. And I want to be able to buy it anytime. Maybe. So as this company gets ready to turn around, it looks good, you see what's going on, you say, I want to convert this bond into some stock and then ride that stock value up. Cryptocurrencies. There are cryptocurrency markets out there where people are buying and selling crypto. And then we got precious metals. We have option trading, in which people can create an option that you can buy or sell the ability to buy or sell shares of a particular stock at a future price. And then foreign exchange, right? There's markets out there where you buy and sell currency, fiat currency, let's call it, not cryptocurrency, but we have that ability. So it's more, also there's more than just individual stocks, right? We talk about these markets. We have mutual funds, right? Where companies pool money together and buy a group of stocks, normally similar kind of stocks, so that people can invest in that and get a better overall return, diversify a little bit so that they can reduce their risk. Again, we talked about options, we'll talk more about, and then we talk about indices, talk about that, and then ETFs. So there are other options out here that allow you to participate in the ownership and the growth of companies. One of the keys to the industrial age, now the information age, and to what they call the conceptual age, is that we have a very liquid market that allows people to take money that they earn and invest it in something that will either earn income for them or future value for them, or both. Right? So it's not mutually exclusive. Unlike other countries, that's one of the keys in the United States, is they have that free flow of capital, as they call it, that you can take however money that you have and invest it in something. And the technology allows more and more people to invest in more sophisticated investments. But remember, these markets, you have to be a knowledgeable, or should be a knowledgeable buyer or seller. So if you're investing in something that's brand new using some of this, for example, new technology and it's cryptocurrency, then you need to become knowledgeable about it before you actually start buying and participating. Because again, that market assumes that there's a certain amount of knowledge. Let's talk about mutual funds. Mutual funds, you get an investment company like Fidelity is a well-known one. What they do is they put together a fund of, let's say, digital companies, right? Now you can go out and you can buy shares in Alphabet, which is now Google, which was Google, Amazon, Microsoft, Netflix. You can go out there and do that. That's one-on-one, or you can buy your own group, kind of like a basket. But what you're saying to yourself, I'm not a full-time investor. I don't have all day to sit here and study stocks. So I'm going to go to a company like Fidelity. I'm going to pay them a small monthly fee based on my investment, right? They take it out of the profits. But what I'm going to do is I'm going to trust that this is what they do full time. And they will get a better return on my money by picking a better basket of stock and investing wiser than I could do. So they create these mutual funds. And if you want to invest in these digital companies, instead of buying them individually, you can buy a mutual fund that Fidelity or Schwab or someone may have, that will buy and trade those stocks for you. And then you buy into the fund by buying a share. And then that share goes up and down. Let's say you're retired and you want a higher return on your investment. So that's your income. You get your Social Security and you're trying to generate another maybe $2,000 or $3,000 a month to live off of based on your investments that you have, right? Your assets. So you take that money and you can give it to buy some mutual funds. And you could buy a mutual fund that maybe has a higher dividend. So that every quarter you get a dividend check. So there's a lot of ways to use mutual funds. Normally, mutual funds are designed for longer term investors. You don't kind of jump in and out of it because there's some fees involved. So you're going to be longer term. It's not meant for people that want to get into the stock market full time, and that's what they want to do. Because you're paying for this mutual fund's knowledge. If they're not doing well and they're messing your money up, then you sell your shares and go somewhere else. But you have a lot of people that are with mutual funds for a long time. Maybe their parents were with that company or grandparents with that company, and they're with it. Second, options. Options are a contract between two parties in which you have someone who is willing to sell you the right to buy a stock at a certain price called the strike price. And they give you a certain period of time to get that done. A year, 6 months, 3 months, whatever it is. And they will sell you that right. And then it's up to you. We'll see what happens with the stock, whether you make money or lose money. So I've got an example here of an option. Let's say you own Facebook stock. But the question is, why would somebody create an option? I own 100 shares of Facebook stock. Facebook stock is going for $383 a share. I have 100 of them. So I basically have like $38,300 worth of stock share. The value of my stock. I create an option. There's a market out there where I can do this. I create an option that says, I'll take my 100 shares, I'll put it in escrow. If I'm giving you an option to buy these shares from me at $400 each. Since there's 100 of them, that's $40,000. I'm giving you 6 months. This option is going to cost you $500. Now, I do this because I don't think the stock is going to go up like that. But it's a good way for me to earn additional income on my investment because I'm getting $500, $5 a share, just for my stock to sit there. Okay, cool. If the stock price goes down, that person's not going to purchase those, not going to activate that option. They're not going to pay $40,000 or $400 a share for a stock that might be, let's say, $300. So that option is just going to expire and go away after 6 months. In the meanwhile, I've got $500 in my pocket. So guess what I'm going to do? 6 months later, I'm going to do it again. If I think the price is not going to move, I'm going to do it again, collect another $500. So I make $1,000 if it works right? 2 options, create one right after the other. So it's $1,000 on my $38,000 worth of stock that I have. So it's just a little bit of additional money I have. If the price stays the same at 383, that person's not going to activate that option either. Because remember, they spent $500, right? So they really spent $388. But again, why would you buy something that's worth $383? Why would you pay $400 for that? Plus the $5, so it's really $405. Why would you do that? You wouldn't. You would just let the $500 go. Now, the reason people buy the options is because they think Facebook is going to go up. They think that Facebook is coming out with their cryptocurrency. They think it's going to really change Facebook and that it's really, the price is going to go up, it's going to make more money. So let's say the price does rise to $450 a share. Well, the buyer will then exercise that option that gives them the right to buy it at 40, right? So in other words, it went from 400, now it's 450. I can now take my option, tell that guy, listen, I'm going to buy these shares for 400. They're in the escrow account. Here's the $40,000. The stock becomes mine. I quickly take that stock and sell it for $450. I made $50 a share, $5,000. It cost me $500 to get the option. I took that 500 and 10x it in 6 months. Where else can you get that kind of return? Basically, it's a 900% return, but it's a 10x on it, right? I turned $500 into $5,000. That's why you do it. So even if it doesn't work, right, you missed it and the price didn't go up. Maybe it took Facebook a little longer, right? So it didn't quite go up like you thought. You lost $500. But guess what? You're going to buy the option again for the next 6 months. Pay another $500. Because if you think about it, if I'm going to 10 times my money when this thing hits, and it could be higher than that, I don't mind maybe losing a couple of times, but when I win, I'm going to make up all that money. So there's a reason for people to create these options and sell them. So it's a way of them to make a little bit of extra money on their stock. And there's a reason people buy it, because they expect that price to change, especially go up. This is just a kind of a basic one. There are a lot of other sophisticated strategies. This is basically how they work. So that's why options are created. The indices. There are a lot of them. 2 big ones is the Dow Jones Industrial Average, created by Dow Jones back in the 1800s. What they did is they looked at the New York Stock Exchange and they took the 100 companies that kind of represented the economy at that time, which were probably railroads, certain manufacturers, and they created this index, which takes those 100 stocks and proportions out a percentage towards each stock. It's like putting a little bit of money into each one, and you come up with an index, and then the index goes up and down based on the price of those stocks in relationship to the group. Over the century, it has become known as the indicator of how well the stock market is doing. And that may or may not be true, right? Because it just represents the 100 best stocks. So stocks are always coming in and out of the index. For example, Sears was probably in it at one time. They're no longer around. Macy's was in it at one time. But now you've got companies like Google and Microsoft and other industries. As the economy changes and the industries change in terms of their relationship of the economy, then the index changes. The other index is the S&P 500, which is 500 different stocks, and it's a broader look at the economy. And now it relates more, they put more of their basket that they put in here related to digital companies. So a lot of people like the S&P because it's broader, so you know companies can't manipulate it as much, right? If it's just 100 shares, you got to watch companies trying to manipulate their price so they can manipulate the Dow Jones Industrial Average. But with 500 shares, each company has less power. They're spread over more industries, and you have some newer companies in there. So it really depends, but both of them do track similar. And many people kind of look at that as being an indicator of how the stock market is doing. And in some cases, which is not true, but people believe it also reflects how well the kind of the overall economy is doing. And that's why some people look at the Dow Jones Industrial Average and see it's going up, but they're getting evicted from their house, or they lost their job, or they can't pay, prices are going up, and they can't pay for this, or, the economy. So there's kind of like an economy for middle and low income people. And there's economies for middle and upper income people that are related to the stock market. So if your wealth is tied more to the stock market, then the Dow Jones or the S&P kind of represent more of how your standard of living is going. But if your assets, if you don't have any assets, or let's say your assets are tied to real estate, then it would not be the stock market that's important. It's the real estate market, which can be different. We saw that in 2008, where the real estate market collapsed, as opposed to the year 2000 when the stock market collapsed because of the over-exuberance of the internet. In 2008, it was the over-exuberance of real estate. So if you were in real estate, you really got hurt in 2008. If you were in the stock market, you really got hurt in 2000. So it's not always, but they do kind of follow a track, because once one goes down enough, the other kind of follows suit. Part of it's psychological and part of it is true. Now, for me, because I like buying distressed properties, I usually wait until the market is distressed, right? When prices are down, the Dow Jones is down, people are feeling bad about the economy. That's usually the time when there's motivated sellers trying to get out. Some of those people are trying to get out at a time when they really shouldn't. They just hang in there and wait. But some people can't do that. So the indices give us an idea about, or kind of rough idea of what, quote, the economy is doing, but it's really only helping that part of the economy that relates to the stock market, because that's really what it's showing, our stock prices. It's not showing the mom and pop stores and what they're doing. It's not showing what the workers are doing. But more and more people now are involved in the stock market because of their IRAs or their 401ks, in which they might have money in the stock market. So they can feel better when the stock market is up. Just like in real estate. Now, with prices the way they are, everybody in real estate probably happy as I don't know what. Rents are going up, They're doing great. Yeah, everything they're doing extremely well. That could change if the real estate market collapses again, and then we see the same thing happen. EFTs, exchange traded funds. This is a little different than mutual funds. A lot of people get them confused, but they're different. A mutual fund is a share that represents a group of stock that's owned, that is managed by some kind of investment group. EFTs represent a particular item, like there's gold EFTs, where one share of a gold EFT might equal 1 ounce of stock. 1 ounce of gold. And it's traded on the stock market. So you can buy it just like any other stock, but it really reflects gold prices. I use that because probably a couple of years ago, I actually bought some gold coins. I wanted to try it out. So I bought some gold coins back in 2019. And it was very hard for me because I had a hard time. I always have a hard time holding on to money anyway, in terms of losing it, keeping track of it. But now I've got these gold pieces. And it was hard for me, especially when I was traveling, to keep track of my gold. And because with a gold coin, the person who has it owns it. Right? So you got your gold coin sitting there, somebody grabs that coin and goes, that's just the way it is. So what I probably should have done is bought a gold ETF. Right? So that 1 ounce of gold, instead of me having to physically hold on to it and watch it, I would have a sheet of paper that represents a stock that's on the market that is traded in my account. So if I wanted to sell it, or I want to, have it grow like the gold prices are growing, then I could do it that way without physically holding gold. Now, the good thing about gold is, of course, anytime I go to a store that buys and sells gold, and based on the market price at that time, I trade it in, it'd be a small fee, and I get my money. So it's kind of instant. But if you think about it, these ETFs in the stock market, now with the internet, it's kind of instant too. So you can get your ETF share and trade it right away, just like you can gold. But I don't have to go to the store. I don't have to do any of that kind of stuff. I don't have to keep, where is my gold? What happened to it? How do you buy all this stuff? And again, this is basic. Some of everybody knows all this stuff. I'm just kind of going over it before we really move on to something that's heavier, especially next week when we get into building your portfolio and starting to use some mathematics and kind of figure out how to buy stock, what's a good stock. So we're going over the basics now. The old way, like back in the day, early 80s, when I was buying stock, and when people were trying to buy stock in the 70s, I remember growing up, you actually went to a stockbroker's office. And if you didn't have one, they would give you a broker who was sitting in the room, and you would talk to them, and you would give them your money, open up an account, and then they could buy the shares for you. And they would help set up your portfolio. And basically, that's what I would do. I'd mail them a check or bring the money in back then. And that's early on, before even ATMs were out there. So normally I would just write a check, deposit the money into the account, talk to the broker and tell them what I want. And then they would buy and sell the shares for me. That, of course, is given way over the last 40 years. So now it's on your phone. You've got apps like Robinhood, which I've used. You've got Acorn, which both allow you now to buy shares. I've got a company I subscribe to. I've got an account. I can't remember the name of that firm, that website, but I can do options also. I can buy and sell options. It links into my bank account, so I can send money in there or take money out whenever I want. And of course, with Robinhood and Acorn, both of them allow you to buy and sell not only shares, but also fractions of a share. It's inexpensive, and it's easy to use. You still have stockbrokers, Merrill Lynch. I don't know if E.F. Hutton is still around, but you got Charles Schwab, uh, TD America. You have a lot of different companies out there where you can open up an account online that transfer your money into the account and buy shares. The computer kind of does it now. Everything is computerized. It used to be physically, people had to be out on the New York Stock Exchange floor buying and selling shares. Now it's all computerized. So except for a few people in the trading room, there's no problem in terms of getting this stuff done. So it significantly reduced the price, made it easier for people to get in and buy shares. And now you don't even have to buy a whole share. You can buy fractions of a share. So the great thing about technology is it's making it faster, easier, and cheaper, and allowing people to have more opportunity to build wealth. You have insurance companies. Oh, and I missed mutual funds. We talked earlier about mutual funds, right? We can find Fidelity and the rest of them, and we can open up an account with them and buy shares in their mutual fund. You have insurance companies. Some of those insurance companies are through an insurance policy that you may have. If you've got a whole life policy, then you've got an investment component to it. And they're investing money, usually in equities and other things for you to help kind of pay off that, help with the insurance policy. They also have retirement accounts, just like I said, a company retirement account, but you can also open a retirement account with insurance companies, IRAs, 401k, and then you can, in some cases, control them in terms of what kind of money you want to put in there and where you want that money to go. The mistake I made early on is I put money in. Of course, when you're young, you don't think you get it. You don't think about 20 years later. But when I was at Morehouse would put money into your retirement account even if you didn't. But if you put money in, they would match it. Now that I'm 65, if I was doing that back when I was 20 or 30, I'd have a lot of money because I had money to put in there, and then they would have matched. And over 40 years, it would have been 35 years, it would have been a nice size chunk of money. Especially I would tell them to put it in the stock market. I did do that for about probably 4 or 5 years, did really well. So I've always said, man, what if I did 40 years or 35 years? But back when I was starting, I invested in the stock market, I invested in real estate. I like real estate better. And the reason was with real estate, I could touch it. I could go by and see it. Every month I would go by and collect rent. Back early on when I was dating, I could take my girlfriend before I took her to the movies and dinner. I said, well, I got to go by my place and collect rent. And what better way to show off to a young lady is to pull up to a piece of property when you're 24 years old that you own, knock on the door and collect a chunk of money. And yes, I'm not selling drugs. I actually own this house and I'm collecting rent this month. Sometimes I would do that on purpose. Or I'd go by there and talk about the price. You could do that. Bring your friends by. But when you own stock, that's different. You can't, we can't do that. Back then, you don't want to take her and say, well, let's go by the Merrill Lynch office and I'm going to go talk to him about all, my portfolio. Nah, that's not going to work. But she might be interested if she was smart. But chances are it's not like ride by and looking at the property that you own. So I got into the property side because I like it. I like the physical part of it. I like the fact that it's something for me to do. When you're younger, you're 20-something before kids, it's something that you could do. Later on, one reason I said earlier, I sold my first property is because I didn't have the time anymore. I had 3 children. I'm married. I got a job, really 2 jobs. Plus, I'm running a little league organization. I just can't. I don't have the time to collect rent. I don't have the time to keep it clean, anything. So for me, that changed kind of how I did real estate. That would have been the time in my 30s to switch, to take that money and put it into the retirement account, right? Now I don't have the time. I could have put it into a mutual fund. I could have went ahead and put it into the Morehouse retirement account and let Morehouse match it and just let it run. That would have been, I still had another 20 years. Yeah, I had another 20 years. So that would work, but I didn't. And of course, you have your bank. Bank of America, of course, bought out Merrill Lynch after the collapse in '08. And a lot of, some of those companies disappeared. Well-known names, I can't think of them anymore because I'm not in stock market, but some of those old names that kind of grew up knowing disappeared in '08 and went bankrupt. Some of them are still around, like Merrill Lynch, like Charles Schwab. Let's talk about the stock price, right? What is it that makes the stock price move? We're going to talk about two factors. One is the stock market is based, those prices are based on supply and demand. On the supply side, when we start a company and we put it out on the stock market, we're going to sell shares. We must state how many shares are going to be available. How many shares does the company have, and how many of them are going to be available in the market? So we get an idea what the supply is. That's part of that knowledgeable buyer and seller. You need to know that. Because if we reduce the supply, right? If we reduce the supply of that stock, if the demand stays the same, the price will increase. If we add more shares and the demand stays the same, the price will drop. That's important to understand because part of what we talked about the other day is how companies can manipulate their stock price. When many companies, when Trump gave the tax break to companies, many companies didn't take that money and invest it to bring in more employees, give employees a raise. They bought shares of stock to reduce the number of shares on the market. Remember, there's an inverse relationship to supply. So if we reduce the number of shares, it increases the price, which makes it look like you're doing better. You're not doing any better, but your stock price is now higher because there are less shares out there. And now people say, ooh, stock is doing better. People have to pay more for what shares are left. So in many cases, when they give a tax break to corporations, corporations buy their shares back, put them in escrow. Less shares, which means we lower the supply, we're going to raise the price. That then sometimes is reflected in the indices, like the Dow Jones Industrial Average. So then they say, well, see, we gave a tax break to the wealthy and the stock market took off, which means the economy is doing better. No, not really. The economy is not doing better. The wealthy people are doing better. They got that big tax break. The shares have gone up for them, but for everybody else, nothing happened. In some cases, their taxes went up because they took away certain tax breaks. But mentally, people can turn on the news and they say, ooh, the Dow Jones has gone up again. It's at an all-time high. Everything's great. And if you do have some shares in your IRA or 401k, then you're right. Man, my balance has gone up. That means my retirement's going to be better. But in the meanwhile, you lost your job, right? Or your salary is not keeping up with inflation. You go to the store, you can't buy stuff. I'm trying to get a car, I can't. Prices are too high. Payments are too high. I want to buy a house, but I can't buy a house because the prices are just going through the roof. So for those that own stock, giving a tax break to the companies work because they take some of that money and they reduce the supply of stock. On the other side is demand. If we can keep supply the same, but increase demand, we can get an increase in price. Right? So demand has a direct one-on-one relationship with price. If you've got a company that has, I don't know, let's say we've got a company like Bed Bath and Beyond. Oh, now let's switch to this. Popeyes. Let's go to Popeyes chicken. You ever eat that fried chicken sandwich that they had? If you remember when it came out first, you couldn't find it. You know, people were selling, buying it, stuff. It was like liquid crack. I remember people talking about. I mean, they had to have that fried chicken sandwich every day when it first came out. It blew them out the water. Well, of course, it reflected in the price of Popeyes Chicken Incorporated, Popeyes Incorporated, right? They were making a ton of money. More and more people said, well, shoot, this is like this. I want to own a share. So the supply was the same, but the demand for the stock changed and the price took off. So how does that relate to buying the stocks? Is if you're looking at stock prices that want to go up over time, then we want companies that really see a growth in demand and become more profitable. I'm not interested in those that buy out their own shares and force the price up, even though they haven't done anything. It's an easier way for the owners of the companies and the managers of the companies to profit without really doing anything better. So I'm not interested in supply side stuff. I'm interested in demand. What drives more people to that business? The next important thing is based on the overall economy and the company's relationship to that economy. Certain companies do bad when the economy is doing well. Certain companies do well when the economy is bad. For example, let's talk about COVID. What did COVID do to all those digital businesses where people were now at home, people were working from home? Who knew about Zoom before COVID? I mean, I used to use a company called Ubu, who went out of business. And then, of course, Skype. Everybody used to talk about Skype. Then all of a sudden, this company, Zoom, comes along, and now that's like a verb. Everybody talks about Zoom, either as a noun or as a verb. But everybody talks about it. Nobody talks about Skype. I'm like, well, what about happened to Skype? But that's how it goes. I remember people, especially older baby boomers. I used to laugh. I tell this story. I used to laugh at Uber Eats. When I started seeing signs on restaurants that they had at McDonald's saying you can get Uber Eats. First time it happened is I was appraising an office building. And I went to the front of the office building and I saw all these people running. There were cars parked in the front of the office building, and all these people were running out to the car and grabbing a bag of like food and stuff and running back in. Now, at first I was saying to myself, is this some kind of fancy way to have a truck service? I mean, what is this? And I figured out it's something called Uber Eats, where people were ordering from work, and of course they were delivering the food. That's the first time I ever saw it. And so, of course, once you hear about it, I started seeing Uber Eats signs at McDonald's. And I used to laugh. I said, man, who is so lazy that they're going to order a Happy Meal and have it delivered to their house for $1.99? What's the delivery charge? You can't get in the car and go get a Happy Meal for your child or something? What kind of foolishness is this, right? Who wouldn't just drive up there, go through drive-through and order a number 2 with a Coke? You got to order through. I just laughed. I used to crack off folks. I thought it was the funniest thing. One day, I was at home working. I was doing an appraisal. I was under an extreme time constraint. Kind of probably played around to the last minute. That's how I am sometimes. So I'm trying to get this work done, and my stomach is growling. I said, ooh, I'm hungry, man. I got to get something to eat. I don't have time to get in my car, drive over this place, and get something to eat. So what am I going to do? I got this coupon for this daggone Uber Eats. It came in my email. I'm going to try it. So I set up my account. I looked at it and I said, oh man, here's a seafood place, right? I'm gonna do this seafood and use this coupon, free delivery and 10% off the food. I'm gonna, let me have some shrimp and I'm gonna have a couple of crab legs and some broccoli. I can't eat fries because it mess up my sugar, so I can't do the carbs. But I said, yeah, I'm gonna do that. So I ordered the thing. I'm working. I noticed on my phone, it's telling me exactly what's happening. Right? It's ready. They pick it up. Here he's driving down the street. Boom, he's at the house. Ding. I said, damn. So I go in there. Of course, I give him, take the food. It's hot. I'm like, go upstairs, go back to work. I'm eating. And all of a sudden, it's in my mind, I said, I understand for the first time. Right? I'm going to do Uber Eats from now on. Why waste my time when I'm under the gun to go get something to eat or sit there with a growling stomach when all I have to do is order what I want and they deliver it and I'm eating it and I'm still in the house? I ain't have to get in the car. I ain't have to use gas. I ain't have any issues at all. So I became a user of Uber Eats. So over time, these companies like Uber and all the other ones associated with this kind of industry, people slowly begin to use this, especially younger people earlier, but even us older folks start to realize. Because once I did that, I got into, of course, Uber. I got into Instacart. For Mother's Day, I was out of town. I used Instacart for my ex-wife and my two daughters that are mothers by going and ordering flowers and a cake from Kroger on Instacart and having it delivered to all three of them. And I didn't leave the house. I ain't have nothing because I'm always the kind of guy who, when it's anniversary, Mother's Day, birthdays, I always don't remember. Somebody reminds me on that day, and then I run out and get the card and get, like you see most guys at the store. Valentine's Day, they're there on Valentine's Day to get everything. Usually later in the day. That's trying to run and find the card. That's me. And I'm trying to get the flowers and food and the cake and all that. Now, I don't have to do that. I just go Instacart and say, I want this cake, put this on it. I want those flowers, and here's a card that I want you to put on there saying Happy Mother's Day. And send it off. 5 minutes, I'm through. And they get it, and they go, oh, Daddy, thank you, thank you, my ex-wife, thank you, I appreciate it, blah, blah, blah. Man, I'm like a superstar. This is the best thing since sliced bread. So, heck, when you talk about the stock price, who am I investing in? All these kind of Instacart, Uber, Lyft, all these companies. Why? Because that's where the economy is going. You can't beat this. The next thing that I tell people, just a minute, I'm really bullish on autonomous cars. I used to talk about it all the time in class 5, 6, 8 years ago. Students say, I'll never get an autonomous car. And I used to tell them, yes, you will. And I'm going to tell you why. Well, your car, where does your car spend most of its time? In the garage or in a parking space? But you're paying for it. What if, with your autonomous car, when you're at work for 8 hours, you can activate that car for an autonomous rental company to take control of your car, take it and run around and deliver food and people, come back when it's time for you to go home, you look into your account, you got $100 in it. You sure you still want an autonomous car? You drive home at night, you park the car in the garage, you activate the car to go with that company. The car takes off, it comes back at 7 in the morning. You get dressed to go get in the car to go somewhere, you look in your bank account, there's $200. That thing was running all night, picking up people and doing stuff. You sure you don't want an autonomous car? It changes what you do, right? I say this, you don't even want a car anymore. Because if you use Uber, 70% of the price of that Uber is the labor. That person riding around in their car. If it becomes an autonomous car, I can drop the price of Uber 60%, meaning a $10 ride somewhere now costs me $4. At some point, I don't even need a car. It's cheaper for me to just call Uber or an autonomous car company whenever I need a car. I don't need to drive anymore. Not only that, most people are going to be bringing stuff to me, especially with driverless cars. You see that commercial I think Domino's has with the driverless? That's what's going to happen. I mean, that's like the future. Within 10 years, easy. Right? So you're going to have people, they're going to deliver everything to you. And then when you need to go somewhere, the car's going to pick you up and take you where you want to go. So what am I looking for? I'm looking for stocks that are investing in or participating in autonomous vehicles. Not only that, the same thing's happening with trucks. They already have, Tesla just showed an autonomous truck. There are autonomous trucks out there already that they're testing. There are autonomous cars that they're out there testing already. And all these delivery companies are looking at autonomous cars to get rid of the labor, like Domino's and everybody else. They'll all have them because the cost drops by 70%. I'm not sure, but I suspect the infrastructure now is being laid for all that kind of stuff, right? I'm sure here you've got places to plug your car in while you're, right? So more and more of those will be in place because people who do have electric cars, it's a good way to get customers because they got to stop and wait. They might as well shop or gamble a little bit while they wait for the car to get recharged. Yes. Exactly. Right. You have delivery all night. It reduces the cost of it significantly. So even small companies or small restaurants can get involved. If they don't want to use Uber Eats, right, they could probably have their own little autonomous vehicle like you see Domino's. Won't cost that much. You keep it plugged in. And then when you get somebody online order, you plug it in there, tell it the address, the GPS takes it there, and it then sends you a text message saying, I'm here at the door. You come to the car, put a code into the drawer, and pull your food out. Then it turns around and goes. You don't have to give a tip. I ain't giving no autonomous car a tip, except to say, keep driving. That's my tip. But I'm not giving them no dollar tip or nothing, so I don't have to worry about tipping. The price is going to be lower. Who wouldn't do that? And here's something else I'm thinking about autonomous cars, I tell people. And I think this is brilliant. I'm in Orlando, I'm in Florida. I'm 8 hours away from Disney World. 6 hours away back when I was younger, but about 8 hours now. You know how I just get older. I'm going to be able to tell my grandkids in a few years, probably within this decade, later in this decade, I'm going to tell my grandkids, I'll tell you what, you did well in school this week. Let's go to Disney. Let's spend Saturday at Disney World. There's no way I could drive 8 hours in the middle of the night on Friday so that Saturday morning I get there, we do Disney all day, and then I got to drive back. It would have to be a weekend, at least 2 hotel nights stay. Right. The autonomous car picks you up at midnight on Friday. It's built like almost a real hotel room where the seats fall back. You listen to music. It's probably, kids can play video games. You sleep. It's an electric car, so it can do 400 miles. It's 400 miles to Disney. You get to Disney 8 in the morning. You wake up, you're in the parking lot. You go to Disney, you play around Disney all day long. By the time it closes at 11, kids are knocked out. They sleep, they tired. Call up the autonomous car. 11 o'clock at night, we get in there. 7 o'clock the next morning, we're home. We had a whole, for Sunday, we had a whole day at Disney. Didn't have to pay for a hotel room, just paid for the car to take us there and another one to take us back. Might not even be the same car, right? They're just moved between cities. We got a good night's sleep in the car, listen to some music, watch some TV, right? Has internet in it. And we get there. It revolutionizes the way people travel for vacations and stuff. You can have more vacations, day-long vacations, and I think it gives trouble to hotels that are along those routes. Because, sometimes when you're traveling, you spend the night in the hotel. I don't have to. The car is my hotel. So I just sleep in the car. And then I wake up and I'm there, or I wake up, we keep going until I get there. The car may have to stop because it's running out of energy, and then we'll swap us out for another car. We keep going while that one charges. But if you think about it, it changes so much, and it makes it so inexpensive. So I could see if I was in New Jersey and I wanted to come I'm gonna say, come on, take my wife and say, come on, we're gonna go to the casino. Let's see, the war concert is at the end of September. Let's go up there for the day, gamble a little bit, maybe play some horses, put some money on the ponies, and then we're gonna go to the concert. And then after the concert, when we're kind of lit up, we're gonna get in the car and it takes us home. Concert's over by, 10 or 11? We stumble on back out to the car, make sure we get in the right one. And then it takes us home so that by, it's over the middle of the night, so there's not as much traffic. And we get back to New Jersey. My hometown, New Jersey, about 5 hours away. Central Jersey. We had a great time at the casino. Ate, drank, gambled a little bit, watched a great concert, got drunk, got back in the car, fell asleep, and then in the morning, we're back home. Man, what a way of driving business. I mean, almost to the point, does it make sense for a company like Disney or Foxwoods to be involved in the investment of autonomous cars to deliver and take people? Right? Big money, folks. We've got an autonomous, really nice car. We'll come pick you up and bring you here and then take you back home when you're ready. Just spend that money, go to the spa, and have a good time. It's going to make people think about stuff. But from a stock standpoint, what am I looking at? Companies that I can invest in right now that are doing that. Right? Because I don't care about inflation, recession. I know this is going to happen. I'm predicting this just like anything else. I know this is going to happen. This makes so much sense. So it's a matter of those companies and being involved in, again, supply and demand. The demand for that stock is going to continue to go up as more and more people realize how much money can be made. So I would be interested in investing even in Uber. Now, one of the big players in it is Google. They actually have autonomous cars out testing out west now. Right? What's that called? Company called Waymo or something like that. And getting all the kinks out of it. So that would be a company to invest in. But finding those companies are key. And we'll talk more about that next week when we get into building a portfolio, right? And what you're looking for. And kind of going through different industries, how these industries are changing and what's going to happen. One last thing we're going to do today is look at stock charts. Of course, the great thing about the internet and information technology now is we can go to Google and let me put in Amazon stock price. And I actually get the stock price in real time for any particular stock. Let's look at Amazon for the max here. This is the chart of the price of Amazon since the 90s. Now I'll pick a date like 98, when it first started. If you remember, Amazon was really known for its ebooks and Kindle. And of course, me, I was one of those people, oh, I'm not going to do an ebook because I like to feel the pages in my hand. And yeah, I don't want it on this computer screen. It's hard to read. It's going to mess my eyes up. My brother was working in a company, software company, where he traveled 5 to 6 days a week. So he was one of those road warriors, they called. He traveled all the time, even though he had an apartment. I told him, you don't really need an apartment, but he had an apartment. He traveled 5 to 6 days a week. And of course, being on the plane so much, he used to bring books to read. And he said one of the best things he ever got was a Kindle, because he could go order the book, have it there, and he could read it on the screen. So he was an early adopter. And then I remember I used to talk about this in class about, as I started watching more and more people using this thing, what that was going to do to bookstores, which happened. Eventually Borders disappeared. One reason Barnes & Noble stayed in there is, remember, they came out with that Nook as a competitor, so they tried to compete. There's still a few stores out there, Books A Million, and hanging in there. But when you go into a bookstore now, there's hardly anybody in there. Because even me, I eventually, on my phone, downloaded the Kindle app. I'm a big reader of science fiction, especially Star Trek books. So I used to have a stack of Star Trek books. I eventually sold all of them to a used bookstore. And now all my Star Trek and all my science fiction books, I just buy them on my app, my Kindle app. When the book comes out, it sends me notification, and then I go out there and I buy it and I read it. So yeah, it has fundamentally changed. And then I remember he was talking about, well, eventually we're going to have this national system where you're going to be able to buy everything you want from the store and have it delivered to your house. And people were like, yeah, right. How are you going to do that nationwide? What we're going to do, we're going to build warehouses everywhere. And he did it step by step. Once he put that infrastructure in place, nobody else can match the infrastructure. And then for him to just add additional products is an easy fix. So he built a whole system, even for entrepreneurs like my daughter, to get involved and have Amazon stores that now pay her $50,000, $60,000 a year. So she now works from home. She retired. She quit her job. Normally, she's in Florida all the time on the beach doing Instagram and Facebook and TikTok stuff, right? But she can work from anywhere. She's just not in Florida now because of COVID. She's scared enough to stay away from Florida, I thought. But she's at the beach over in Savannah. But she can work from anywhere, right? So this whole system developed, and then you see what it did to the prices. So that now, 20-something years later, it's $3,100 a share. So yeah, if you had bought those shares back then when he was talking about this stuff, everybody's hating. Oh, no, he's not going to do that. That's impossible. And then all of a sudden, you see the bookstores go out of business. Then he's talking about he'll deliver for free if you get a Prime account. I ain't paying no $12 a month for what? Next thing I know, all my daughters, they don't shop anywhere. Every day they get something at the house, like back in the day with the post office. Every day, Amazon truck is dropping off something at the house that they ordered. And I remember my brother lived in a condo that was down the street from an Amazon warehouse. He used to get like hour delivery. I mean, it was unbelievable. And that's when I realized. I said, you can order something in the morning, and when you came back at the end of the day, it was already there. Then why am I shopping anywhere? Plus, he had Amazon Prime, so he got free shipping. Why am I going to Kmart or Walmart to go find anything? Why waste the time and stuff? He just go on his phone, order it, go to work, come back, it's dead. And it didn't cost him any more. Matter of fact, it was cheaper. So look at what it did to the price. Yeah, if let's say I was a late guy and I come along in 2005, right? It's $40 a share. 17 years later, it's almost 100x. I'm at $3,400 a share. That's an 80x. It means if I put $1,000 in, I now have $80,000. Holy cow! And it's not just Amazon, right? Let's look at Netflix, because this is the one I'm kicking. When I saw Netflix, I realized, remember when they used to deliver to your house, right? You used to order and get the DVDs delivered. Well, back then, that was my younger days. I was bootlegging movies off the internet back then. And I realized what streaming was all about. We didn't have the high speed direct. I did in my office. Let me not say that. In 2001, I had high speed. So I was bootlegging movies and burning them on the DVDs in the office so I could take them home. I wasn't selling them now because as a college professor, I didn't want to get caught. But I was burning the movies so I could watch it at home, right? But when Netflix started doing it, I said, well, you know what? It's only a matter of time before everybody has high speed. At that point, why don't they just stream the movie? They don't have to worry about, first of all, remember with Netflix, you didn't have to worry about late fees. So why am I going to Blockbuster anymore? I used to go to Blockbuster all the time. You have to beg on late fees. I heard watch the movie, get it back to the late fees. It, of course, drove all of those, Blockbuster and the rest of them out of business, right? Because you can get it delivered at home, you can hold it as long as you want. But I knew that. I said, well, they're going to be having high speed everywhere. People are going to be able to, Netflix is going to be able to deliver to your house instantly. What do you think that's worth? When you can cut the price of shipping, DVDs, everything goes away and you just stream. I said to myself, and it's about this time, I said, man, I need to invest in Netflix. But of course, I'm busy doing all this stuff and I'm buying real estate. At that time, I bought a house in 2002. I'm busy. I do, hey, I have money in my IRA. I could have called the company and said, buy Netflix. Didn't do it. Of course, it takes off, and now we're at $564 a share. Holy moly. When I'm looking at this damn thing, it's not even, it's $5. This is 100x in 15 years. Man, if I had put some of my retirement money in there, I definitely would be in the Caribbean now. I'd be doing this just on Zoom. You used to be at the beach and back. We'd be talking about this kind of stuff. Mm-mm. Mm-hmm. Oh yeah. That's right. Yes, it is. I use my brother and I share a Sling account. which is the same thing. YouTube TV has one. They're a little bit more expensive. We use Sling. I think Sling might be $50 a month. They let you have 2 users at once. We kind of split it in half. But yeah, that's it. That's why, again, I realized early, once Netflix was started streaming and all these streaming companies came, cable's in trouble. Because my problem with cable is I'm paying almost $100 for channels I don't watch. So if I can move to Wi-Fi, which I did, first with the cable companies, and then I switched away to AT&T, who was not a friend of mine, but they were cheaper. So I went to AT&T to have Wi-Fi in the house, and I went to all streaming services. And the streaming services allow you to have more than one person. So we do a family fee. Every family member buys a streaming service, and we all share the accounts among each other, so that nobody's paying a whole lot of money, except for the $70 or $50, whatever you get for the Wi-Fi, or your internet. Everything else is we're not paying that much. Maybe maybe $10, $12 altogether with a couple of different services everybody's paying for. Most is the $25 for the Sling. Yeah, well, Netflix has come along to reduce all of that, but that's what that's built into the price people are paying. So if you stop them from doing that, you may get some pushback in terms of where they're going to go. So companies have to be careful, because it's all about content. So when you look at Disney Plus, or now Paramount Plus, I pay for Disney Plus, Paramount Plus, and I pay Disney because of the Star Wars and the Marvel series. And I pay for Paramount Plus only because I'm a Star Trek Trekkie. So all the Star Trek shows that are coming out. Netflix and stuff I share from other people. Yes, they did. Right. Yeah, because people going elsewhere. That's silly. That's right. They backed off. They realized that, it's silly. It's like, this is a little touchy, but that service OnlyFans. Now, OnlyFans, we know what it's all built about, right? Benefits, like however you want to handle it. That's their service. That's their bread and butter. They're going to all of a sudden cut off their bread and butter? Are you crazy? If I owned that stock, I would have sold it that day they said something like that. The fact that they even thought about announcing that meant they don't know what the heck they're talking about. Now, of course, they backpedal because but they're still in trouble, because a lot of people who make their money on that don't trust them anymore. And once you lose trust, they go into other services that are coming along and say, yeah, we'll take you. Man, the kind of money these people are making? Holy cow. Whether you agree or disagree, the one thing it does is it puts them in a safer environment. There's no reason for them to be out on the streets no more, or any of that kind of stuff. And they're making tens of thousands of dollars a month. So yeah, when these companies have to realize, they make these errors, they say these things, everybody learns about it right away. We've got a knowledgeable group of buyers and sellers, this market out here. You say something crazy, deuces. I'm out of here. I'll either go without you, or I'll fire somebody else. I don't have any problem with that. And again, especially streaming. I got one more streaming services than I can watch. The problem I have with Netflix are two things. They constantly get rid of series too early. And second of all, you get caught with some of them and you end up daggone binge watching, and you don't sleep at night. I remember the first time I got caught up, what was that show called? It was called Broadway, something Broadway. I can't think of the name of it. And somebody introduced me to that show, and I binge watched that damn thing about 2 days straight. Boardwalk Empire, whatever that thing was. That was a good show. And I binge watched them all the time. I remember when Luke Cage was on, I binge watched that. There was this other one, I can't think, it was a crazy show. They only did 3 years of it. I was mad. But I binge watched those things. So my problem with Netflix, with the series, is I can't watch it because I binge watch it. You know, you can't wait the next day. I binge watch. I binge watch all my stuff like that. Star Trek, Star Wars. What's the other one I subscribe to? Oh, Prime. I get Prime because I'm a Prime member anyway. But I get Prime because I binge watch Jack Ryan. I like Jack Ryan. What was that show called? Was it called Dark Matters or Black Matters? I can't remember the name on Netflix. Great science fiction series. That one and Love, Robots, and something. Those series I like. I binge watch them. So, yeah, that's the problem I have with those streaming services. But what's funny is my grandkids, they can't watch regular TV anymore. Because the first thing they complain about is commercials. Why is this thing stopping? Why do they keep running these commercials? I said, that's what TV does. No, I didn't see a commercial before. And then I realized all they're watching is streaming, and I got YouTube Prime that they use, right? So they're watching cartoons on YouTube. There are no commercials. Or they're watching Netflix or Hulu, those cartoon things. And I realized they get upset when a commercial comes on. I mean, they really get upset. And I'm laughing, I'm saying to myself, we grew up on commercials. So it's interesting how things change. And if you watch how they change and you watch those younger kids and what they're doing, they're going to tell you. Because my oldest daughter was saying with this GameStop thing that happened, because my grandson is into computer games and plays and stuff and goes to GameStop, she was going to buy some GameStop and put it in his little account that he had, just as a way to say, you own some. But she didn't do it. So she could have got GameStop back when it was little or nothing. And then, of course, the thing blew up. And she wished she had done it so she could show them how it works. So, if you're thinking about buying shares on something looks really good, you need to buy a couple of shares just anyway. She does invest now. So she go to Robinhood. It's easy to do, and buy you a couple of shares. You say, oh, this company's doing autonomous trucks. Okay, I'm gonna get it's $2 a share. I'm gonna go buy $100 worth of shares. I'm about 50 shares to throw it in Robinhood. Now I'm not even gonna think about it for a while, and watch what happens. And you can see, just like we show, where we're gonna end up. So next week, we're going to talk about how do we build a personal portfolio, and then how do we find the shares and the different kind of stocks and bonds and options to put inside of that portfolio to accomplish what it is we're trying to accomplish, which is really wealth creation, right? So that first class that talks about wealth creation, both real estate and the stock market help us get there. It's just, remember, the stock market, we talked about how do we define that property we're looking for? Well, now in this one, how do we define that portfolio that we're going to build of all these different things we've been talking about? Like you say, autonomous vehicles, or delivery services, online systems. Where do we find those stocks? How do we do that? Do we do mutual funds, or do we buy the stocks outright? If so, where do we get them? How do we do that? How do we identify them? Because we're not always going to have winners. We're going to have some losers. I met a guy once. As a matter of fact, I brought him here to Foxwoods when we were, this was 2015 when we were negotiating a deal here. I brought him from California, and he had made millions. I mean, he was only about 30. He made $200 million by selling his company to Yahoo. So he was sitting on Yahoo's board. and I was talking to him, and what he does is he invests in internet companies. And I asked him, what do you do? And he said, well, we invest based on these companies, but we know 70 to 80% of those companies don't make it. But he says that one or two of companies, basically 10 to 20% that make it, pay a return much higher than to cover the cost of the other 8 that went under. So that 80% that collapsed, the 20% makes so much money, it covers that and more. So they know that if we're going to go after autonomous vehicles, we'll invest in 10 of them, only 2 of them are going to make it. But when they make it, they're going to go from $2 to $2,000. And that's how you play it. So don't look to say, okay, I'm going to invest in these companies and all of them are going to hit. Because I can show you some other companies back in the day when Google first started that I thought were going to be big companies, like Yahoo, what we were using, or this one we used to call, it's called Ask Jeeves, was a search engine we used to use. And I don't know whatever happened to all those companies. And again, I used to use a video streaming service called Uvu, and they eventually went out of business. I thought they were better than Skype. When I was teaching classes online, just experimenting, I used to use Uvu. It was pretty good. But again, they went away. So if you had invested in it because it looked like a good deal, I'd have lost my money, but I would have made it more than enough on Amazon and Netflix. So you have any other questions? Yes. Exactly. As a matter of fact, I did that. I was looking at 5G, autonomous cars, and something called the Internet of Things. And what I did is research and found companies that were building the towers, they still are, for the 5G network. And if you lay it out, there are certain companies you bet, and those stocks are taking off. Because 5G is part of this. You're going to have 5G in order to have autonomous cars work right. You've got to have 5G in order to have the Internet of Things work right. So all that infrastructure, you can invest in it and benefit just like the companies that are going to use it. So you're exactly right. And that's why cryptocurrency is the way it is. You're investing in these systems that right now, they're a little exotic, people are making money, it sounds great. Where 10 years from now, it's going to be what everybody does. And you're going to say, oh my God, I wish I had bought a couple of coins or a half, piece of a coin. So I tell everybody now, just go ahead and get $100 if you're using Cash App, PayPal, or Robinhood, and buy some crypto. I don't care which one you buy. Well, of course, I believe in Bitcoin, Ethereum, and a couple of others. You just start putting $100 away every once in a while, and I don't care what the price does. And you wait until 2028 and see what you have. I think you'll know here before then. I think 5 years from now. What is this? This is so 2026 you'll know. But I'll say go 2028. Don't wait that long. But I'm telling people, if you end up with 0.2 of a Bitcoin, not a whole Bitcoin now, 0.2. Bitcoin right now is about 50. I think it just broke 55 again. So I'm talking about $10,000 worth of Bitcoin right now. You bought that and you let it sit there, I will guarantee you will be a millionaire. I guarantee you. That's what I tell everybody. So that's $10,000. If you can't do 10, you can do $100 do it. I don't care. But if you can build up to $10,000 worth of Bitcoin, $20,000 worth of Bitcoin over time, I guarantee you by 2030, you're going to be, if not a millionaire, you'll be close to it. Yeah.
I'm in it pretty deep because it's already, I've already seen what it's done. I mean, I've already seen what it's done. I started buying, remember I taught a class here in 2019. I started buying in February of 2019. $100, Robinhood, $100 here and there. And back then, Bitcoin, I started buying Bitcoin was $3,500. And everything that they said since then has happened. So I believe everything that they say is going to happen because it's supply and demand. Plus, you have to understand what it is. That's the key. What it is. You know, it's something totally like Netflix, like Amazon. It's something totally different that we don't quite understand. We can't relate to it. Like the automobile, right? When they first came out with the horseless carriage, I remember my grandfather said that his father, my great-grandfather, laughed at it. Man, this is garbage. Who's gonna, I got a horse. What do I need that for? And it runs out of something called gasoline. Once they run out of gasoline, what you gonna do? When it breaks down, how you gonna get repaired? And the roads were all dirt. When it rained and got muddy, that thing gets stuck on the road. My horse makes it through there into town all day long. What do I need that for? If I could have taken him and threw him 100, so 50 years into the future, he'd be sitting around saying, oh my God, what is this? These roads, what is this? An interstate? Gas stations? Car repair places? Dealerships? What is that? So I say now, Bitcoin, what are you gonna do with that? Throw you 10 years in the future and you'll be like, man, there's no more banks. There's no more, I don't have to go to Western Union like I did last night to pick up some money. People just cash app it to my phone, but using cryptocurrency. Meaning they could be anywhere in the globe on whatever currency they're using, and they send me Bitcoin that transfers to whatever currency I want, or I keep it in Bitcoin and just buy it using Bitcoin. And people, you'll go to the store and say, you mean this car costs 2 Bitcoin? What is that? Because it'll be listed in Bitcoin, won't be listed in dollars. And one day that'll happen, where there will be no currencies as we know. It'll be Bitcoin. It's a bread that's 0.002 Bitcoin, or really like 20 sats, which is the breakdown of Bitcoin. And you'll be at the store saying, what is that? You take a 20 and they'll look at you, 20, what 20 what? What is that? $20. Man, you better get out of here. You print that up or something, what is that? That's what's gonna happen. And those people that have it now will realize what they have. We don't at this point. So it's interesting. But anyway, we'll talk about that some later on.